Well, this is Michael Douville coming to you from beautiful Phoenix, Arizona. This is February 18th, 2021. I wanted to take a chance and recap some of the things that have been going on. Recall in January, I did my forecast. I thought that we were going to have an absolutely incredible first two quarters. Here we are, we're into the half of the first quarter. Things are doing absolutely amazing. The economy is just on fire. And here in the great markets of the United States, housing has absolutely exploded to the upside as per forecast. So I want to go over some of the reasons and see where we are, if we're still on track for that. So if you recall, Goldman Sachs put out their 2021 GDP forecast, which I agree with. I want to bring this to your attention, though, that they brought this out in December prior to this $1.9 trillion in stimulus that's about to be released. I knew about that and thought that this 8.5% GDP growth could actually be almost the double digits. I thought we had a very, very good shot of going into the second quarter, going to 10% GDP growth. That would be an absolutely amazing quarter. Here we are in the first quarter. We are doing really, really well. The economy is really on fire. And do we have a shot at getting an 8.5? I think so. Let's just take a look at some of the things that would make me say that. We got this industrial manufacturing production just a couple of days ago for January 2021. This is a courtesy, all these slides are courtesy of Zero Hedge. You can see in here that we're talking that this is the industrial production, and you can see this industrial production took a nosedive in March and April and has come back. It is just 1 or 2% away from what it was prior to the recession. We talked about the fact that the economy would be recovering, but maybe it would take a long time for it to recover. But as you can see, it is recovering. This is a very pronounced V-shaped recovery, and it's almost back to where it was. Now, manufacturing is this green. We've had 8 months of continuous manufacturing increases. In January was no difference at all. We're coming back. We're very, very strong with manufacturing. So industrial and manufacturing are just on fire, doing very, very well. Anecdotally, we're hearing trouble with builders are having trouble getting air conditioners, appliances, refrigerators, washers, and dryers. So some of the appliances are having a very hard time getting hold of some of these. Now look what's happening in the retail and food industry. Now retail and food, again, the same type of thing. We've had a huge just drop off. The economy, of course, just came to a standstill. That was a government-induced recession. It was due anyway, but they really put the kibosh to it. We had this tremendous, tremendous drop, and we've got this V-shape up, and we've actually recovered above where we were in 2020 when the recession started, and we're off to the races. You can see retail is doing well, and food sales doing exceptionally well. As per our forecast, we're looking really, really good on that. Now, here's when we start talking about housing. So where are we in housing? Keep in mind, we had a huge bubble here in Phoenix, Arizona. We were the poster child for the bubble in 2006 and 2007. Now, we can't compare dollars to 2006 to 2021 because there's an inflation factor that needs to be factored in. So if you look at the normal inflation rate between 2006 and 2021, well, it was almost 30% in benign inflation. That means that your purchasing power was cut by 30% in that 15 years in benign inflation. Housing suffered even more than that. So if you look, it was over 40%. So a base rate of from 2005, which would have been the peak, a $100,000 house would now be $140,000 just on an inflationary basis. So that's a pretty good adjustment. That will bring us dollar for dollar. Now we're on an equal playing field. Now look at this. This is the Case-Shiller U.S. National Price Home Index. Here we are topping in March 2006 to 2007. Now, oftentimes people think, well, we hit the bubble peaked and that was it. It is kind of a process. It's actually even started in 2005. You can see this is 2005. It's really slowing down, and that is a topping process here, and then it starts coming down. And of course, this is a bottoming process, and it didn't bottom here nationally till about 2012, 2013, and then we're off. Now, take a look right here. Look at this spike that we've got in the latter part of 2020. This is only till November 2020, and you're going to know that this just continued all through this November, December, January, and February is pretty remarkable. We've got a huge spike to the upside. Now, if we inflation adjusted these here at the peak to now, if we just inflation it on the housing inflation rate of 40%, inflation adjusted, just to get back to the bubble, it would be 258.37. We were not there in November. We were at 232, very, very close. However, we don't have December or January, and I believe that we've reached the bubble peak. So we just now, after 15 years, have reached where it was at the peak of the bubble. So we're just about even to that in inflation adjusted dollars. Now, what does that mean to you? Keep in mind, our timing model is based on an 18-year real estate cycle. I think we're right about here. We're coming out of that little bit of a correction. This was absolutely, we forecast this as March 2018. You can look at all of the statistics, and you see that for 9 months in a row, this kept coming down and kept coming down. We talked about the fact that we thought that we're going to have about an 18-month correction period, and sure enough, December 2019, we bottomed, started coming back up again, and portions of the national are starting to correct a little bit. The great markets, I don't think we're going to see much of a correction in the growth at all. New York City, of course, is having trouble. Chicago is having some trouble. Silicon Valley and San Francisco, some of the high rent districts are having trouble. This might be just a little bit of a correction for them, but we are definitely entering into the accumulation phase. And I think we're going to start going into the explosive phase in as little as 12 to 14 months from now. And I'm going to peg this. We need to take a look at it. Again, it's going to be a topping process. It's not going to be a peak like this. It's going to be kind of a topping process. But this is going to be somewhere around 2024. This could go to 2025 if on the process itself, and then it's going to complete and come back down. What does that mean for you? It means that you have all this time. You probably have 3 or 4 years with which to accumulate properties and enjoy the explosive phase. And this is where fortunes are going to be made. Now, we teach this, we talk about this. This is my new book is coming out. I'm pretty proud of that. That should be out within the next 3 or 4 weeks. You're welcome to send me at michael@michaeldouville.com if you're interested in getting any book orders. We're more than happy to do that. If you have any kind of concerns or questions, you're welcome to reach me at michael@michaeldouville.com. You can try reaching me at my corporate in Phoenix at 602-942-4200. So that's 602-942-4200. I'm going to tell you, thank you so very, very much for listening to me. And as always, the business is absolutely outstanding out there. It's a great time to make money. It's a great time to be confident. Business is going to get better. The best is yet to come. My very, very best to you guys. Take care. Bye-bye.